So, good morning, everyone. I hope you're all well. Very much welcome to the next Flash Friday from Holland FinTech. And we've got a great guest today, Neil Hopcroft from Forum 3. Neil, very much welcome. Thank you for joining the show today. And of course, as usual, what we're trying to do is actually give you a bit more grip of not just what the news has to offer, but actually dive in a bit deeper and have a conversation about what's going on in the world and how you could actually make sense of that. So I hope that's helpful to give you all a bit better understanding of the developments in the world. Of course, we're also more than happy if you're participating in the current webinar to take your questions and see whether we can answer them or perhaps deal with them in a follow-on session. My name is Ginsel, as you can see on the slide, perhaps, and I'll be taking you through the news today. But first of all, let's have a talk with our guests today. Neil, very much welcome, and thanks for joining. You're working for Forum 3, great payment processor behind a lot of the fintech companies that are doing really well at the moment. Could you tell a little bit more about yourself and what you do?
Yeah, sure. Thanks for having us, Don. So Neil Hopcroft, I'm Customer Success Director at Forum 3, and we are a payments as a service company, but we do a connection to payment schemes across Europe. So a lot of people think of payment schemes as Visa and MasterCard, but there's also what you might hear the term an ACH, which is an automated clearinghouse, and they are national infrastructures that actually process bank-to-bank payments. And previously, that's been super difficult to connect to. It's been like a combination of software and hardware and long drawn-out processes, whereas we've got a fully cloud-native infrastructure which enables you to connect via API to multiple schemes at the same time. So we have full reach across Europe. So that's in the UK, faster payments and backs, and then separate instance, separate direct debit, and separate credit transfer. And that instant space is something that basically all banks and regulated institutions are really, really excited to get into, and a real game changer in the face of payments and how that is a complement to cards. So we service any financial institution and bank that wants to get in that space and offer them a full suite of products. So connection to the scheme, a fully managed service, IBANs and accounts. So yeah, as you say, we service some of the well-known fintechs and banks going, so Whole BBVA, Square, a couple of tier 1 banks as well. So yeah, it's a great place to be.
Really nice. So I think this space is booming at the moment because a lot of banks are figuring out how to accelerate their whole digitization in general, and people are expecting much more from their payment solutions these days than before. Yeah. So business must be going pretty well for you, I assume.
Yeah, exactly. So we deal with a lot of banks that are actually completely replatforming. So going from their old infrastructure and looking at every little piece of that chain, and payments is one of those. And usually when we go into a bank, there's this spaghetti of multiple connections into the same scheme to service multiple things in their bank. So they might have 10 or even 20 brands under their bank. So how do they rationalize all that payment infrastructure? And now banks are much more willing to collaborate with companies like ours rather than just acquire them. So before, you might have seen a bank acquire a fintech and not really know what their business is, whereas now they're much more willing to outsource even something as important as payments to a company like ours to fully manage that end to end. So yeah, business has been really good for us actually over COVID, because banks still have to replatform. Yep. So we're dealing with 3 of those replatformings at the moment, and they're also launching new ventures as well. So they're also spinning off kind of challenges of their own, as well as we service lots of challenger banks and fintechs too. So whilst we have had a bit of a slowdown in some, especially card companies that use our infrastructure for bank-to-bank payouts, we still see a lot of traction in other areas of our business as well.
That sounds really good. I think so one of the things that I've heard quite some companies about is that in the B2B space, it does seem much harder to get new deals done because people are just taking much longer to take decisions. On one hand, because they work remotely. On the other hand, of course, we see a larger uncertainty in the market, and well, people are a bit worried to really sort of follow through and make expenditure at the moment because liquidity might become tight. Do you experience something like that as well? Is it mostly existing customers that are accelerating, or is it also still possible to land new customers these days?
I think it really depends on the mindset of the company that you're dealing with. We are a remote first organization. So it wasn't too much of a shift for us to go to remote at all. Our office can only actually hold about half of our employees because most of them work disparately across the whole of Europe. So in terms of how we work and who we work with, it hasn't really impeded that level of decision making in order to get a deal done. And also to work with them to do like complicated infrastructure projects as well. So, we are really well skilled in servicing that audience. It's mainly how they've reacted to it as well, and how we can help them manage that with us.
Yep.
So yeah, again, I think it's going to be something which this isn't revolutionary, that everyone's going to be working remotely before. And I always like to say remotely rather than working from home, because you can work anywhere now. I think working from home.
You open it up, right? I think
yeah,
people have a sort of a fixed idea about it, but you could actually indeed also be on your sailing boat, basically.
Yeah, exactly. And I think working from home makes it sound really restrictive. And whereas you say I'm working remotely, like you say, you can take your laptop anywhere. And I think it leads to some cracking innovation, actually. So I think you'll just see an extension of that.
Yeah. So what was your most exotic place where you actually flipped open your laptop to get some work?
Well, within the confines of COVID, I just live about a 10 minutes, about 10 seconds from the beach. So okay. my Wi-Fi can nearly get down there, but I can still hotspot a 4G every now and again. So if you need to get out for half an hour, it's a nice place to be.
Oh, very nice. Very nice. That's definitely a good idea to do that from time to time, to give you really that feeling that you're actually indeed flexible to choose where you can work.
Yeah, exactly.
So cool. Yeah, I think there's a lot going on in the payment space, and especially as you were saying, let's say that the banks are all continuously investing in their digitization and product offering, also with regard to payments. We see that, I think, across the board, that that's one of the places where investments keep on going, regardless of COVID. Including also, for example, everything that helps with their internal processes to make them more digital, because the banks weren't really made for remote working. Yeah. So that's, I think, one of the challenges that they're facing. And I see that across Europe also, in different cultures, basically, the banks are more or less ready for actually doing remote work.
Yeah.
So
I think I've actually been surprised at how well they've pivoted to working remotely, and certainly with the banks that we're working with anyway. I think there's a realization that that it is going to be a new normal, and now people have had to adapt to it for what is quite a long amount of time. Like 3 months is nothing to be sniffed at, and if you can keep a business running for that amount of time efficiently, you do start asking questions of, do we need this amount of office space in a HQ which has got a nice painting in the drawing room? Like I don't necessarily think so. So I think it's a really great thing that companies are more willing and more trusting in their employees to do that, and also get a decent amount of, well, if not more amount of work done from it, and spend more time, like less time commuting, more time with their families. So I've seen a really positive response to it.
Yeah. Although I do think that as I think everyone was able to bring everything to a remote kind of way of working, but you could also feel that it's the habits haven't formed yet to such an extent that it feels like normal, or in the sense that also I think that we've managed to really make it a comfortable place for humans to work like this, right? So I think if you look at the interactions, like, I mean, I love that we're able to do webinars like this, but it's not still not the same as actually sitting beside you, having a cup of coffee and having this conversation, in a shared room. So there's still some work to be done, I think, to sort of complete the experience for a remote perspective.
Yeah, absolutely. And I don't think you can never bridge that. You can never beat, face-to-face interaction, and whether that's an hour of work, or, going to the theatre, or going to the pub, or whatever it is, as much as it's only, 8:30 in the morning in the UK, I'd love to be having a beer with you rather than it be over Zoom. So you're never going to replace that, but we can work as best we can to kind of fill in the gaps.
Yeah, Fully agree. Fully agree. So we remain human, even though we might be plugged into a computer quite some time of our life.
Yeah.
And maybe to talk a little bit about the news. I think, how are you regulated at the moment? Are you an EMI?
No, so we're actually not a regulated business at all. We rely on all of our customers to be regulated. So we'll work with EMI licenses, PI, banking institutions as well. But we're a technical messaging platform and an infrastructure play.
Yep.
So we don't actually touch any money, not in the flow of funds at all. That's the domain of our customers to make sure that they're regulated and refine the user experience for their propositions. But as I say, we're not a regulated entity.
Yeah, so you see now that the regulators are picking up on payment institutions and EMI because they feel that they're running a larger risk.
Yeah.
You know, partly due to security breaches, let's say a higher security risk at the moment, but also because some of the businesses, especially in the EMI business, electronic money institutes, they see there also quite a big decline in business, which puts them at risk. Let's say, do you have a way of, let's say, dealing with your customers? Do you have to also be more careful at the moment as a tech provider to these kind of parties?
Well, you always want your customers to be liquid and to be able to service their end customers well. But I think that the fear really of the regulator is a lot of these fast-growing fintechs are actually loss-making, and that they want to offer a loan proposition or something that could leave the end customer at a more vulnerable position in which they started. So I think that's more the focus of the regulator rather than incorrect business models, because a lot of the propositions are actually really beneficial to the financial ecosystem. It's just during this time when you've obviously got declining spend from people and investment money seems to be drying up, how can we ensure that those businesses are viable in delivering what they are?
Yep.
So I think that should be the focus of the regulator, and I really hope it doesn't lead to regulators tightening up on their freedoms to fintechs, because especially in London, where it's definitely the most open city in the world, and the UK, I shouldn't just say London, to fintech. I think that should remain the way, and it has provided a really positive disruption to what were archaic banks offering proposition. And I think that if you go down a model which is over-regulated, it will just affect consumers in the end. So,
yeah, I fully agree. I think that's also we've seen already a bit of regulatory crunch, right? So it's actually, I believe it's much harder now to start a fintech company, especially in the regulated area, than let's say 5 years ago, because we've seen an enormous increase in anti-money laundering, know your client requirements, transaction monitoring. That puts quite a burden on anyone who's active in financial services.
Yeah, but I also think there's a clearer line of sight to actually what fintechs are doing, because they often do one thing really, really well. So it's not, a massive, payments and loans and accounts and trade ledgering and crypto. Yes, they span out, and as they grow, they can offer more products, but usually they're in a better capitalized position, and they have a little bit more kind of substance on their board. And they've, you've seen, for instance, the likes of Monzo growing so quickly that you've seen the CEO now step into a presidential role because he doesn't want to deal with the regulatory kind of pressures on a day-to-day that a banking executive might want to. So I think you really see that shift when you go from, fintech to scale up to then mature company, and how that company culture evolves as well.
Yep, I think I think it's a really valid point, that indeed companies go through such different phases, and I think that's also something that the regulators aren't so much used to yet, that actually they need to cater for all these different phases differently. Right? They rather have one uniform form and shape of regulated entity, while of course someone who's growing very fast behaves completely different than a company that's been around for a century or more.
And I think people are getting, and certainly in the UK anyway, they are getting smarter about that. And it's not, closed shop. They are more willing to accept new business models and see innovation and how that is benefiting people, rather than going, what's under the lid? I'm not quite sure what's going on there. They're more inquisitive and more likely to be accommodating of it.
Yeah, I think that, I mean, I fully understand indeed sort of the area of the regulators, that they're looking now into what's happening in this field, because indeed companies that are bound to grow very fast might also be more fragile when that growth stalls. Right. So that's
and you have seen a lot of fintechs that are, you know, raising money over this time successfully as well. So you know, they're obviously doing something right. And I just think in the world at the minute, you see such a big gulf between tech, and I mean any tech, and the rest. So just as like anecdotally, you see you know, the stock market at the minute, the Nasdaq's up on the year, and every other stock market in the world's down 20%. So that, like, the gulf between tech and the rest, and I even think there's a gulf between fintech, tech, and the rest, that I think is like undeniable. So as I say, like the way this kind of pandemic rolls out and who rises to the top, I think it's going to be absolutely fascinating.
Yeah, no, definitely. So I think already indeed you see like parties like Marqeta, for example, indeed getting funded again at enormous valuations, 4.3 billion US dollar.
Yeah,
was enormous again.
Yeah.
While I think we were expecting more, especially after the WeWork debacle last year, that sort of the tech valuation would be coming down a bit. We saw, of course, at the beginning of COVID, that also you saw a decrease in neobank signups and also valuations there, right? Your down routes, or at least equal level rounds being done. What do you think is happening there? I think you're still very optimistic, if I listen well.
Yeah, I am optimistic, and there's a couple of environmental reasons as well. You know, like money is now cheaper than ever. So where are you going to put it? And fast-growing fintechs acquiring customers is certainly one place. But I also think the kind of sign-up kind of with new neobanks was a bit of a misnomer, if I'm honest. You know, if I'm at home and I'm not transacting on my bank and I'm not experiencing problems with it, why would I sign up to a new one? You know, like, I haven't got the everyday like problem in front of me every day of my card not being accepted, or, you know, a bank transfer going wrong, whatever. So I think that while there is a bit of stagnation naturally as a human being, I'm less likely to change things outside that I'm not using as much. Like, I haven't taken my wallet outside for the last 5 weeks. It's just not as much of a problem for me. But I think that companies like Marqeta, and we saw it with Plaid last year, where they have got such a core customer base of really fast growing, in Marqeta's case, kind of card companies, you know, like the Squares and the investment platforms like the Robinhoods, I believe. While their customer base is growing rapidly, they're just, you know, absolutely fill your boots time. So, you know, I think, again, great business model, expanding into Europe where there's very little competition. I believe, you know, there's Carter Worldwide, there's GPS. You know, I can't think of, you know, maybe Wirecard's in there as well. I can't think of a huge amount of other players being in that market. So I think it's, you know, where I don't know anything about valuation. Like, I'm not an investment guru, but I'm not surprised by the raise that they've had, and they'll probably go on to float sometime soon.
No, exactly. Yeah, that seems like it as well. The markets now actually seem quite favorable, because even though you said, right, I think Nasdaq is definitely performing much better than other stock markets. You still see that the stock markets are actually still doing relatively well compared to all the economic predictions that you basically get issued from all sides. Seem to be far more negative than what the stock market gives credit for. Curious how that'll go.
Yeah, exactly. And you know, even on the back of that, there's some cracking fintechs as well that are in that space, you know, like the Robinhoods and Free Trades, that are able to capitalize on those consumers wanting to invest, for one. But again, it's unprecedented, the amount of stimulus that's being put in the economy. So how do you even work it out? I have no idea. Like, I'm no stock market guru, but it seems to me that people are quoting the biggest depression since the 30s, but it doesn't seem to be like that in the stock market world. So
no, it's a funny thing, but let's say I think there's quite some sounds as well, is that there is some kind of tech bubble still going on. If you look at the Nasdaq figures and the fact that a lot of the companies that are actually being valued as such numbers still aren't profitable and might never reach profitability at in some occasions.
Yeah,
there are some risks there, of course.
Yeah, exactly. And while there is still that fight for user base rather than profitability, I think you're always going to get that as well. And I think the real game changer there was when Facebook just charged on, and nobody could believe its valuation, and nobody could believe its valuation. And here we are, that it's one of the highest valued companies in the world on a what was a freemium model that no one really believed in when it was all those investment rounds. But yeah, what a phenomenal story.
Yeah, no, it definitely is. So I think that's interesting if you talk about sort of the capturing of the user base, right? So we saw this week also that again, Samsung is also doing again a new partnership for Samsung Money. Just following like Apple Pay, so device-based payments initiation, basically. What do you think about these trends? Because I think they're also really about capturing the access to the digital realm for consumers to a certain extent.
Yeah, so many Samsung devices in circulation. It's a no-brainer. A bit like Apple, they had to respond. There's been a Samsung and Apple Pay for a while now, and it's really interesting to see how they broaden out their spectrum of products. I think it also feeds quite well into how more e-commerce merchants are going into getting licensed as well. So the likes of Uber and Airbnb and Google, they're all set up to license to hold money. So where does that go, and what kind of services do they want to offer their customers? And we're certainly having lots of conversations as a company about, do you want to offer a virtual bank account, like a sort code and account number or an IBAN? Do you want to enable bank-to-bank payments? Do you want to connect to schemes, not just card, but ACH, SEPA and the likes as well? So it's super interesting to see how it's all being developed. And with Samsung in the US being such a card-dominant place to be, it's obviously an extension of what they're already offering, but I think really interesting to see how that pans out and how it competes with what is quite a busy fintech scene over there as well, because you've got like Square Cash, and you've got Venmo, and obviously all the incumbent banks, and it's really hotting up. But there's obviously a very large market as well.
Yeah, but still, there's also, I think, especially on the payment side, there's still a lot to be won as well, right? So I think the experience there is not. I mean, there's still people running around with checks all the time. It's still a signal for market opportunity, I would say.
Oh, absolutely. I think I read this week that cards in the US are like 4 trillion a year, and then ACH and checks. No, I don't want to be misquoted. It's something like 46 trillion. So like you can see that space is absolutely ripe for a disruption, and it's absolutely what we're doing in Europe over here, because the ACH in the US is very fragmented. There's no instant payment scheme there at the minute. It's very, very slow, which is why the likes of Venmo and others have like stepped into that space to try and improve peer-to-peer payments.
Yep.
So yeah, like what is happening in Europe, in the US, is what we've been doing in the UK and Europe with faster payments, with SEPA Instant, to try and allow more banks and fintechs to access bank-to-bank payments, to create better propositions, payment products on e-commerce websites. Yeah, the US is a super interesting market, and I hope Form 3 will be landing there one day as well.
Yeah, I think especially if you also work with some of the neobanks here, you see that all of them, let's say a lot of them, N26, Revolut, Monzo, put it on ice for a moment, but they all seem to be very interesting in the US market to expand there. And it seems, of course, that especially from the consumer payment experience, there's a lot to be won. So they might actually stand a chance, even though it's a tough market to conquer, I would say.
Yeah, and from a payment experience, especially it being so dominated by cards, and them being very expensive, the appetite to move away from cards must be huge. The interchange, and there's even been some legal cases. I think it was Walmart that took the card schemes about how they're overcharging for interchange. So, as you say, ripe for some disruption, and there is obviously ongoing disruption over there.
Yeah, no, Cool. So one thing I was wondering about. So I think if you look at the payment space, also is interesting. I think that, for example, you saw this acquisition of a Brazilian supermarket chain, retail stores that actually bought this US-based Airfox company that basically is a fintech company that also does wallets and looks at sort of, let's say, the digital banking perspective, looking at financial inclusion.
Yeah.
So you had this supermarket already with, I think, 100 billion in credit to their customers.
Yeah.
It's really interesting how they're basically moving into sort of creating their own digital bank from a retail perspective. Have you seen that elsewhere before, or is that something that's interesting for you as well?
Well, I saw the headline, and to be honest, I thought that was nothing new, because I don't know about in the Netherlands, but in the UK, there's Tesco has a bank. It's been around for ages. Marks and Spencer's, the retail chain, they have a bank. They offer mortgages. They offer insurances. It's not quite as neatly packaged as a neo or challenger bank, certainly, but they are banks in their own right, and they have chunky mortgage books, and I would probably describe them more as an incumbent, actually. So it's not something new at all, certainly from the UK perspective, anyway.
Yeah. But because in other places on continental Europe, it actually doesn't happen that often.
Right.
I think that it's actually much more rare to have that combination of activities.
Yeah. So I think it's really interesting that they can create wallets, because if you're going to check out, and why not have I don't remember the name of the supermarket you mentioned, but why not have a wallet branded in that supermarket's name, where it can be closed loop. You don't even have to go outside of the app of the supermarket. You can just say, okay, deduct that off your wallet. It doesn't have to go to a card scheme or anything like that. Away you go, and it's a real stickiness. Especially grocery shopping, super competitive. So if you can make that sticky for a customer, then all the better.
It's via Varejo or Vorego. I'm not sure how to pronounce it.
Yeah, I'll let you do that one, I think, Don.
But indeed, so I think it's also it's interesting in any case that they make the transition from this traditional financier base to actually try to digitize that as well, make it jump forward. I think also into fintech from that perspective. So I think that's quite an interesting play.
Yeah.
Maybe one last thing would I think be interesting to mention is, as I read this morning, that KKR is making a big move on data centers, right? So I think you're also, especially in Europe, you of course also with your tech platform, you have to run on data centers, and I think from a European perspective with GDPR, that's quite sensitive on where these are based. What do you think about a move like that, and what do you think, is there a big opportunity for the data center market still at the moment?
The demand for capacity is nuts. Whether that's everyone now on Zoom, or how many people are on Disney. Well, thank God for Disney Plus, by the way, because I've got 6-year-olds. So that's absolutely fantastic. But if it's Disney Plus or Netflix, and now we're getting into platform banking, it's just absolutely enormous. So I have no idea how many or what the capacity is at the minute, but it seems on the face of it that it's only ever going to grow. And I haven't once heard a customer demand that we wouldn't be in the cloud. It's certainly where the market's moving, and in lots of places has moved. And it's just interesting to see which other industries move there next. So I think in that perspective, there's 3 main players in the web servicing space, and a bit of competition and a bit of innovations always welcome. So I think that's good play.
Good idea. Well, I think, Neil, I'm actually sorry, because we're basically out of time.
We're out of time. Wow, going quick.
Having a really nice conversation here, so I really like to talk. So,
should we carry on after? Or?
No, yeah, definitely. Just turn off the camera and we'll continue. So in any case, I would really like to thank you for bringing up talking about Form 3 and your view of the developments in the market. I hope it was. I thought it was really interesting, and I hope also all our listeners and viewers were enjoying it as well. Is there anything, last things that you would like to mention? Anything we should look out for in the news page of Form 3 for the coming period?
Yeah, well, thanks for having us on first. I really enjoyed it, and it is a really unusual time that everyone's in at the minute, and hearing everyone's experience has been really useful and kind of comforting as well. You know, when we've been having these webinars and online conferences and things like that. So it's really great we can do this, and you're in Amsterdam and I'm on the South Coast in the UK. But no, we will be making a lot of noise actually in the next month. We've got some really exciting things happening. I've mentioned that we've got, you know, 3 really key and transformational deals that are happening at Form 3. Can't quite reveal what or who they are yet, but we'll be making lots more. Yeah, we'll be making lots more noise, and I hope to include Holland FinTech in that message as well.
Yeah.
So,
please let us know. We're always keen to get a scoop, and of course get your word out towards the rest of the world. So well, again, thank you very much for joining us, Neil, and everyone who's listening in, thank you very much as well. Have a great Friday. Have a great weekend. See you next week.
Cheers.
Cheers.
Bye.